When I first started trading, I had no idea what I was doing. Like many others, I was chasing candles all over the place. I didn't understand market structure, and most importantly, I didn't have any trading setups whatsoever to keep me consistent in what I was looking for. In this video, I'm going to give you one trading setup, the short squeeze, with rules and exactly what to look for on a daily and weekly basis to help you find these larger moves within the market. Not wasting any more time, let's get into this video right now. As previously stated, we'll be going over the short squeeze trade setup today. And like many of my other videos, I always start off with the characteristics of the trade, okay? I want you all to kind of build a picture of what am I looking for on the chart to say, yes, that could be setting up for a short squeeze. Let's see if it plays out in the following day or in the next 2 days. Kind of building a sight picture for short squeeze. This is a 2 to 3 day setup. The best ones have 2 to 3 days of previous day's low being triggered into the market. This is going to get more and more breakout traders into the market, and that is the whole point of a short squeeze, is to squeeze out the shorts, okay? Must have a dump day, so a day that is dumping down and getting the market down low for the market to essentially create a large consolidation rectangle at the low of the week and then reverse aggressively in the opposite direction. Must have a break in structure to the upside. This is on a 15-minute chart that I'm referring to. And finally, I'm looking for a trend, I'll put in quotations, a trend back into the low of the week. Essentially, that trend is just a pullback for the move, the continuation move up. Now, real quick, before I continue, I want to hear in the comments, before I even go to the next chart, do you see all of the things that I'm talking about on this chart? And let me know after I flip, were you right? All right, here we go. This is the exact same chart that you just saw in the previous slide, except now I've zoomed out a little bit, of course, and annotated a couple of levels. This level right here is low of the previous day, obviously the low prior to this day, and it is also the low of the current week. We have a dump, consolidation, a break in structure, and then a small trend, quote unquote, back down into the low of the day and an explosion back up. That is exactly what you're looking for the short squeeze. Now, of course, I'm going to get some more into detail with these, but I do want to give you a general overview and a good picture of what you're looking for. So, reiterating, it is a 2 to 3 day setup. We have days of previous day's low having been triggered in. Must have a dump day. So we've dumped the market down and gone into consolidation. We have a break in structure to the upside, and then a trend, again, quote unquote, back down into the low of the week, which is this Monday right here. And we have time on our side, the pin and the engulfment at 9:30, 9:45 for the explosive move. Some considerations that you want to maybe just take into account when looking at the short squeeze setup. These setups should build a 1 to 2 day rectangle at the low of the week. Notice on this chart how the market's come down and consolidated now for 1 to 2 days. Sometimes it'll be 3 days. Okay, and you'll notice this high right here and it gets blown through. So it could be like a 2 to 3 day rectangle or a 1 to 3 day. Best in combination with other signal day confluence, such as a first green day, 3 days of breakout traders, etc. So this is a dump down and then we have a day that closes above the open. So, this could be a first green day as well. And that's just something to take into account. These are meant to be a high-tier trading setup, a range expansion opportunity with better risk to reward. Range expansion being taking the tool from here, pulling it all the way down, and then using that as profit targets and keeping your risk tight as normal, 10, 15, no more than 20 pips or so, and then you're looking for that 50, 100 plus pip move. Watch for the low bear candle. On this chart, you can see the low bear down here. I have drawn a line across, and you can see that it has acted as support. Does that mean that the market must always stay above that candle? No, it can trade down through it, pull back, trade down into it, pull back, trade down into it, and then finally explode. And you're going to see an example of that here soon. Also, as I said in my last video, anywhere from now until January 1st, if you like, comment, and subscribe to the channel, you'll be entered in to win a 10-week free mentorship where I help you with daily review of watch list, post-trade review, weekly review, and really any other assistance that you could possibly need in your trading journey. I will be selecting 10 of you, but every time you like and comment a video, that is a entry into the competition. Another example here on gold. Dump day on Monday. We had a 3-day rectangle. It is a smaller rectangle at the low of the week. Low bear candle is support, and of course the breaking structure. So here's the dump day right here on this Monday. And you'll see this a lot where Monday is the day that brings the market down low, and then it'll consolidate at the low, break structure to the upside. We have our little creeping fake trend down back into the low. You can see the low bear candle down here that I don't have drawn, but we do have another low bear down here. We have a smaller rectangle now within the larger rectangle, and it breaks out and goes vertical on day 3. So we have dump day 1, breaking structure day 2, rectangle day 3 for the explosion back up. Additionally, I would like to point out that this is a first green day. So we have a day that has opened here and then closed there. So we had a dump, first green day, breaking structure. This is also an inside day. We have not broken the previous day's low. So the only two things that can happen on inside days is breakout and trend or false break reversal. And additionally, of course, first green day. So you have pretty much 3 things going in your favor. Now, remember I did say that these trades can be 2 to 3 day setups, where sometimes you'll get the dump day on Monday or another day of the week, whatever, brings it down low. And then on the following day is where you get your trade. Okay, so this is the dump on Monday. We have a break-in structure on the Tuesday, and also the dump back into the low bear candle at the low of the week in the same day. So we're still on this Tuesday for the reversal back up, the short squeeze back up. Time of everything is important. Seeing the break-in structure is important, obviously. And then you see the little W at the low of the day. Notice the rectangle. We have this high up here from, I think this is the London session high on the prior day. So when this market broke out of this smaller rectangle, the only other place that it could go was back up to that high. Again, range expansion opportunity. You would be dragging the expansion tool from here down and finding targets on the way up. Now, although I did not include the criteria on this slide, just know that it is the same. This is the British pound Japanese yen on the 15-minute chart. And on this Friday, so a little bit different on the day, right? This is a Friday, brought the market down low, dump day, and then we had this high right here, which was broken first thing on Monday. They dumped the market back down into the low of the previous day, but doesn't break the low. Rectangle consolidation at the low of the current week, and the explosion back up through not only the high of the week, but back up to the last profitable trade from Friday. Now that I've kind of pounded that idea of dump day, 2 to 3 day rectangle, low bear candle, and the consolidation and the reversal into your head, I'm going to show you some 1-minute entries that are optimal to really boost your risk to reward on these trades. But this is the 15-minute chart of the British pound Japanese yen. Notice the dump day, notice the rectangle, notice the break-in structure. We have a high, a lower low, higher high, and then everything inside is just inside, okay? They're dumping down, dumping down. We get the little trend back down into that low bear candle, a slightly higher high, break-in structure again, 1, 2, 3, and an engulfment. Anybody who's watched my previous videos has hopefully seen my entry criteria video. If not, please go back and watch that video. I'll try to get it up there so that you can click on it. But this essentially is my entry criteria. I need a high or low formed. I need to trade back into that high or low in some type of 3 push variation. I need a break of structure. I need a chart pattern such as an M, a W, triple top, triple bottom, or a head and shoulders on the 1 minute chart. I need a pattern engulfment, so an engulfment essentially of that MW, triple top, etc. I need a pin hammer. That's kind of, I'll say that's optional. But more importantly, I want to see this time engulfment for further entries. So, after knowing what I just told you about my entry criteria, we have a previous day's low down here. All right, so this is a pretty aggressive entry. But once they break through that level, notice the candles get much larger, okay? And start thinking about, what does that get people to do? If the market wants to go back up, they want people to go short. So the moment they break this level, okay, just notice the size of the candles. They're very small, relative. 1, 2, 3, down, up, down, engulf. The larger W now could become an aggressive entry as well. Why is it aggressive to me? We don't have a break in structure on the 1 minute chart. We have the break in structure on the 15 minute, but I haven't seen a strong break yet on the 1 minute chart. We do have this high up here. We get the break in structure right here. So we need a pullback now. They come down, stair step, 1, 2, 3, and then again, they break, make a higher high, they come down for the lower low. This is a beautiful entry. This is, I would call, picture perfect for the continuation back up. This is another 15-minute chart for reference. This is the US dollar Swiss franc. Large dump day on this Monday. Large consolidation for the next pretty much entire day. We have a break to the upside. They dump it back down into the previous day's low, low of the week. And notice, just on this chart alone, you got 1, 2, 3, and an engulfment, okay? So let's go to the 1 minute chart now and find the entry on this chart. This is a pretty detailed, and I've got the entry criteria as well over here. Pretty detailed explanation of my entries and kind of what I'm seeing through my eyeballs, but I tried to put those things on the screen, if that makes sense. You have a high up here, and you can't see it because it's off the screen, but notice down here, so this line right here is the previous day's low from, let's go back. There we go. So this is the previous day's low. See the pin that comes through it, okay? The market came down, but we didn't hit the previous day's low. That's very suspicious. It gets that close, but it doesn't take it out. That's weird, okay? I want you to remember that forever. I get suspicious whenever that happens. We break structure to the upside. Remember I told you there was that high that you can't see over here? We hit it on the 1 minute chart. Spiked it, and then it comes back down. Again, doesn't take out the previous day's low, but comes very close. This is why it's suspicious. Get people to long, get people to put their stops to break even. Come down, get people to long, get people to put stops to break even. Take them out in one swoop, and then the market actually goes in an intended direction. It's basically creating liquidity or an added pool in an area. Comes down, finally hits that previous day's low, and it gives you the little W down here for the first entry long. With that, I've even included how my brain works as far as the ads. First entry long comes up, okay, and we have the first engulfment right here of the 1015. So I know I highlighted it over here, but I would have added right here on the engulfment of the 1015. Once the market confirms that 1015 and does not come back down below, I would be also looking to add as well. So like if it comes back up through this 10 o'clock area, I'd be happy to add again. Once I add again though, okay, and so like 1, 2, 3, we've engulfed, we're going higher. If I were to add again and then add again, I'm putting all my stuff to break even. Because think about it, look at my red cursor. I probably have my average fill in this area right here. So I'll just put my stops just above that. I know this video has probably been a little bit faster than you're used to, but I got my point across with the characteristics, some extra things to look for, as well as knowing that the other signal days are still important when looking for the short squeeze setup. When it presents, it can be a very good risk to reward setup that if you only were to take one per week would probably be able to supplement your income. That being said, I hope you all have enjoyed watching today. Hit that like button and subscribe, and you'll have a wonderful day.